On Business Incorporated today, Egypt plans to develop a new indicator for its currency and add instruments to hedge against risk. And Serbia reintroduces visas for Tunisia and Burundi nationals. Plus a look at climate change and its implications for the Nigerian energy industry. Hello and welcome to Business Incorporated. I'm Will Ibong. Let's kick off with market numbers from Africa, where it's mostly negative sentiments at intraday. In Nigeria, the NGX was trading 0.03% lower, while South Africa index dropped 0.8% at intraday. Elsewhere, we saw Egypt in the green at intraday, up 0.86%, while Kenya closed Friday's session negative, down by more than 1%. Now to the Middle East, where most major equities were trading mostly in negative territory, except for Saudi Arabia. The Abu Dhabi index and Dubai indexes were both down at intraday. Both indexes fell by more than 0.5%, as we can see there. And still within the region, we saw Saudi Arabia was up 0.25%, while the Qatari index dipped by 0.7% at intraday. Now we cross over to Europe, and a generational task. That's how German Chancellor Olaf Scholz and EU Commission President Ursula von der Leyen characterized the task of rebuilding Ukraine after the war. Their comments come on the eve of a major donor conference for the country. Stephen Beasley is with Deutsche Welle, joins us from Berlin to give us more updates on this. Stephen, is it not too early to talk about rebuilding in Ukraine?
Yeah, it can seem a bit absurd to talk about this at a donor conference that's scheduled for Tuesday when we look at the fighting that's still ongoing right now in the East, very heavy fighting there, and also the recent attacks that we've seen across the country that's been targeting energy infrastructure. So it's very clear that this war is a long ways from being over. At the same time, Ukrainian allies say that when that time does come, that the Ukrainian economy needs to get on its feet as soon as possible. And that means that critical infrastructure needs to be built back in place. There needs to be a plan in place for rebuilding businesses, for rebuilding energy infrastructure, for rebuilding schools, for example, and that will help Ukraine be able to solidify its position. Now, the task ahead is frankly monumental. Back in September, the World Bank estimated that there's a $350 billion price tag on reconstruction for Ukraine, and that was before what we've seen in the past month. That was before the additional fighting in the East and before Russia really targeted all of this new infrastructure. So what we're seeing with Olaf Scholz and Ursula von der Leyen in this joint commentary piece they published in a major German newspaper, what we're seeing is they're trying to gin up that excitement, that commitment to delivering that money. And they're saying, look, this not only is a generational task, but frankly, this is an opportunity for Europe. Remember that Ukraine has candidate status right now for the EU, so it's going to need to be rebuilt by certain standards when it comes to digitalization, when it comes to sustainability, but also when it comes to institutions such as rule of law, such as anti-corruption. There are opportunities to build the country's administrative services back even better than they were before and more in line with the EU. And so that's something that's already a kind of format can be created for that at the moment right now. That's where the focus is going to be.
But how dire is Ukraine's financial situation at the moment?
Yeah, the current financial situation is and has been pretty dire. The Ukrainian government estimating that it's running a $5 billion deficit every single month. It was saying that since the beginning of the war, it's running a $38 billion deficit for this year. Now, in the meantime, it's received financial commitments from nations of some $50 billion. Those are commitments. That's not money that's always come out. And so therein lies the problem, is trying to bridge that gap and get the money that they need. President Zelensky has said that he hopes out of this donor conference to get $55 billion in funding. $38 billion of that would cover that deficit, and then an additional $17 billion to help with that critical infrastructure right now, talking about the shelter that people need going into winter and bringing energy infrastructure up to line that's going to be absolutely necessary for the months ahead.
So what can we expect from the markets today?
What we're seeing today is that European markets are mostly up on anticipation that in December the U.S. Federal Reserve might actually go a little bit lighter with an interest rate hike than it has in recent months. That speculation that it might not raise interest rates as high as it has is a small current of optimism right now in an otherwise a bit of a dour picture. We've seen, for example, in Germany, the new Purchasing Managers Index that came out today, reaching a 29-month low. That's essentially a proxy for manufacturing activity, and that's on energy concerns. The price of energy continuing to rise here. That's definitely eating into bottom lines. That's as bad as it's been since May 2020, and that was at the height of the first COVID lockdown. So that gives you a sense of how bad things are here as Germany heads into what is expected to be a recession for next year. Meanwhile, in London, the FTSE 100 actually down as the pound there strengthens and as everyone looks ahead to the next Tory leadership conference, or to the next election, I should say. Otherwise, investors grappling with some new numbers out of China, GDP there improving in the third quarter better than expected. And then all eyes are going to be on the European Central Bank on Thursday to see what it does with interest rates, again, in light of those energy costs and the soaring inflation here in Europe.
Thanks so much, Stephen Beasley, for that. And good news for the UK, which we are going right about now, and to where the search for a new Prime Minister is on. And Juliana joins me from London with updates of this and more. Juliana, in the morning, we saw a surge in the UK pound. Is it still surging? And what are the prospects as Rishi Sunak leads the race to become the new Prime Minister?
Good afternoon. Well, there was a surge in the pound yesterday when Boris Johnson, the embattled former Prime Minister, pulled out of a race he didn't officially say he was going to be running in. And when I spoke to Inni this morning, we were all set for Rishi Sunak to be coronated, as some of the press is saying, Prime Minister at 2:15. When we get the announcement, the ballot will close at 2. So just really in a few minutes' time. But there does appear to be some sort of politicking, as we could expect. There's a huge role. Let's not forget that even in our economic woes, Britain still has one of the strongest economies in the world. And Penny Mordaunt, the contender going head-to-head with Rishi Sunak, has said that she is not pulling out of the race. That is causing a lot of infighting in the Conservative Party. They know the public appetite for a long hustings with what we saw in the summer is just definitely not needed. We're not going to go through 6 weeks. If indeed she does get across that 100 threshold, which would turn this into a real competition, and then we will find out who is the next leader on Friday. So the odds-on bet is that Rishi Sunak, with 194 votes, which is well above the 100 threshold, will be announced at 2:15, but there is still a lot to play for, so we'll just have to wait and see. Going back to the British pound, it was higher. It's lost some of those gains against the US dollar, but still very much in positive territory.
It's quite a tussle going on there in the UK, and I did read that if Rishi Sunak did come in, it might meet an ungovernable Tory party, and I'm hoping that that doesn't happen. But how are other markets reacting to all of this?
Well, yeah, so the markets are in decent shape at the moment because, of course, markets, they like stability. And if we do have a successor for Liz Truss at 2 p.m, that means at least we can breathe a sigh of relief until, of course, a recession and all those other issues kick in. But at intraday, the all-share is up 0.06%. FTSE 100 down by 0.47%. And the FTSE 250, that domestic market, it's up by 0.15%. In the currencies market, the British pound is up on the US dollar, up by 0.22%, also up against the euro by 0.75%. And the British pound at intraday is up against the Japanese yen by 1.43%, Will.
So, Juliana, while we're counting down for the new Prime Minister to come in, the Royal Mail is also counting down. Now it's 100 days. They've given 100 days warning deadline for people to stop using stamps without barcodes. Can you tell us more about that?
Well, yeah, that's right. These barcoded stamps have been available from consumers since about February, and it's really just a way to make tracking post much easier. We know that things have all become digital, especially during the pandemic. That's definitely leapfrogged the way we were doing things in the past. But not enough people have been getting these new stamps. We know that stamps are a big collector's items here in the UK, so the Royal Mail have issued this warning to customers, to stamp holders, to make sure that they trade those old style stamps bearing the effigy of Her Majesty the Queen by the 31st of January, which is 100 days from now. This has got nothing to do with new stamps which we're expecting to show the face of King Charles III. This is purely to do with that barcode. So you are being asked, our viewers in the UK, to put, to swap those old stamps in and use them before the deadline, which is next year.
Thanks so much, Juliana, for that update, and we'll look forward to the announcements, and we'll see who wins. And now to Asia, where Hong Kong stocks and mainland China markets fell sharply on Monday, while other major Asia-Pacific markets rose. Hong Kong's Hang Seng Index spiraled down 6.36% to its lowest level since April 2009, with the Hang Seng Tech Index down more than 9%. Mainland China markets briefly entered positive territory on better-than-expected economic data before falling again. Now, the Shanghai Composite in mainland China was 2.02% lower. The Shenzhen component lost us 2.05%. In Australia, the S&P ASX 200 was higher at 1.54%. The Kospi in South Korea gained 1.04%, and the Kosdaq added 2.08%. Japan's Nikkei 225 climbed 0.31%, and the Topix was up 0.28% to close for the day. Now we move to U.S., where stock futures rose after following early trade on Monday. Futures tied to the Dow Jones Industrial Average rose 0.18%. S&P 500 futures advanced 0.13%, while NASDAQ 100 futures set 0.004%. Now, the moves come after yet another volatile week for stocks as third quarter earnings season heat up. On Friday, the Dow gained more than 748 points. The S&P 500 and the NASDAQ composite rose 2.37% and 2.31% respectively, and that added to the gains from earlier in the week. The S&P 500 and Dow Jones gained 4.7% and 4.9% respectively, while the NASDAQ rose 5.2%. So far, earnings reports have had mixed results for stocks. On Friday, bank stocks like Goldman Sachs and JP Morgan Chase gained more than 4% after reporting results, but not all results have been solid. Snapchat 28% after reporting an earnings miss. Now, a look at climate change and the impact on Nigeria's energy sector right after the break. This is Business Incorporated. Just stay with us. Welcome back. More than 190 countries have adopted the Paris Agreement, a legally binding international treaty on climate change reached at COP21 in 2015. The agreement aims to keep a rise in global temperatures to below 2 degrees Celsius from pre-industrial levels by the end of this century. Now, climate change is dominating conversations right now, and in many countries have made pledges for energy transition, and we are on a race to net zero. John Owajimogo, energy and infrastructure leader, EY, joins me to discuss this climate change implications for Nigeria's energy sector and more. Good afternoon, John. Good to have you in the studio.
Thank you. Good afternoon. Thank you for having me.
Now, it seems that this energy climate situation is really impacting Nigeria's oil and gas industry, especially with the flooding we've had now. Many oil majors have had to, called force majeure, at this moment. Even LNG at one point, but they came with a reback saying that they're still in operations. How do you see this? What impact, how much impact do you think this is having on our industry at the moment?
Well, you're referring to the floods that impacted the gas fields that feed into the LNG. And one may say that flood is a natural phenomenon, but our scientists will say the impact of climate change is that the intensity and occurrence of it is happening more regularly. So in that respect, we are now beginning to feel its impact locally given the disruption to gas flow. However, in the industry, climate change really represents an existential threat in the sense that it has implications of disrupting established business models on how we produce and consume energy, given that the energy sector is on top of the food chain in terms of contribution actually contribution in carbon emission. But you can see precisely why, and that's because energy is the lifeblood of our livelihood. It impacts everything we do. Is the engine that drives all activities, whether directly or indirectly. So it's not surprising then that the oil and gas industry is in the epicenter of the conversation around what needs to happen to stem the impact of climate change.
And so we'll look at it, say that we're trying to curb climate change emissions, achieve net zero, but we say human activities are very crucial here.
Right.
Some would say that the energy sector is a major driver for the impact of climate change that we're experiencing right now, and Africa being the major, being at the receiving end of this is more like, where do we stand here? How do we come out of this when we really survive on fossil fuels?
True, and a point I would like to make in responding to that is that Africa contributes 3.8% of the global emissions, which is very negligible. And to put that in context, so for Nigeria, that's even less than 1%. So to put that in context, and in a way, that's a reflection of our low energy access and low levels of industrialization. So any conversation around dealing with the impact of climate change would have to recognize that disparity in the contribution between the more industrialized countries and African countries that still are dealing with existential needs of providing energy security to their citizens and fueling the industrialization that will drive them out of poverty and provide food security and all of those things that are within the social development goals of the UN. So in that context, there needs to be the idea of a just transition and ethical transition is being discussed, which is that we need to recognize the disparity of our contribution to global warming between the global north, the industrialized nations, and the global south, the least industrialized nations, and recognizing that we have an urgent need to provide security to our citizens and to drive industrialization. So that disparity needs to be understood. And a compact, I believe, has to be reached between the global south and the global north. In particular for Africa, I think a concerted effort is required. African countries should have one voice in discussing what pathway to energy transition that we should have, recognizing that fossil fuel may be required in the short to medium term for us to get to that point where we can then transition into cleaner energy, given that the global north, polluted the planet on their trajectory to prosperity. Now, I don't subscribe to the narrative that there's a linear pathway to development. We don't have to follow the same pathway that the global north followed. Like, we don't have to go sequentially from coal to gas to petroleum. There can be a leapfrog. However, that leapfrog is very expensive. See, the energy ecosystem cannot be transformed cheaply or quickly, right?
So speaking of the pathways and the cost of financing this transition, the road to net zero, what should African governments really be focusing on to really achieve what we need and to be able to fight climate change, provide security, as you mentioned, to curb the impact of this on our agriculture and other aspects of our sectors of our economies?
And what is interesting is that the Nigerian government has come out upfront and identified gas as the bridge fuel towards reaching net zero. So recognizing that gas, and given that this is a resource that we have huge endowment of, ninth largest in the world, provides that bridge for us to slowly transition into cleaner energies. It's a cleaner burning fuel than crude oil, and it also has huge capacity for energy storage and can be that foundation for us to now start incorporating other cleaner energies like renewable energy. However, most of the financing and most of the support that comes from development of gas or even for the transition to renewable energy, unfortunately, still comes from the global north. So for for African countries, that's why I said there's a need for a compact in saying, do we need to develop an energy bank to make sure we can finance, even if the global north were to say, okay, we think renewables is the pathway, and that's what we're going to support, and we're going to withdraw support from fossil fuels, which is something we're already seeing in the market. A lot of banks or finance houses are increasingly looking away from fossil fuels. Then we are left to our own circumstances. And I think this is where the collective strength of the 53 countries in Africa, in speaking in one voice, in coming together and developing an energy roadmap, and that could be in the form of an energy bank, in being able to finance our own energy development to make sure we meet our peculiar needs of energy access and industrialization.
So just speaking of, is this what's currently going on with industry stakeholders at the moment? Because you look at rising energy prices, especially for gas in Nigeria, price of gas is skyrocketing. So do you think they can achieve this cleaner energy part that we're looking at? Is it realistic? Is it achievable at the moment? Just in a quick point.
You know, it's to arrest the impact of climate change will require a concerted effort among all stakeholders beyond the oil and gas industry. So, for example, agriculture and land use related to agriculture is the second largest emitters of carbon. And so when you think about it, even if you were to take away the contributions of the energy industry, you're talking about maybe at most 40%. There's still quite a, which is significant, but there's still quite a lot that's being done by other industries, and also energy indirectly impacts those other industries. So it requires a concerted effort across the stakeholder spectrum. And that's what I'm saying, where there's that compact between the north and the south in being able to provide, whether it's technology, whether in terms of other support, whether it's financing, in enabling companies and countries to easily transition.
Thanks so much for this. We're hoping that this concerted efforts, actually comes to fruition and, births good fruits for Nigeria and Africa as a whole. Thank you so much. Thank you so much, John Owajimogu, Energy and Infrastructure Leader, EY, for joining us to discuss this crucial matter today.
Thank you.
And now Serbia has put an end to traveling without visas for Tunisian and Burundi nationals following pressure from the European Union to deal with an increasing number of migrants reaching the zone from this route. Starting November 20, nationals from these two African countries have to apply for a visa in order to visit Serbia, which has been the last country to waive visas for Tunisians and Burundi. According to the official data, more than 22,500 migrants have been reported to Tunisian coast since the year began, and nearly half of those come from sub-Saharan Africa. The country is currently in the throes of an economic crisis, with an estimated third of its 12 million strong population living below the poverty line. And that's it on Business Incorporated. Thanks for watching. I'm Will Ibang. Bye for now.